Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Tuesday, this 20th of August 2013. Now, we are in the middle of the summer markets. We know that volume has been thin. There's been a lot of range trading. However, there's been some notable outliers. Really, the last few sessions, we have seen some real stirrings of something that could be very, very big. Now, that has started in emerging markets. The rupee, the Indian rupee, it fell to another record low today. We've seen similar declines of similar magnitude across the emerging FX space, including the Turkish lira, the Indonesian rupiah, the South African rand, even the Mexican peso, which has got much better fundamentals, some would say, than some of those emerging market currencies. That's also been under attack. But could things change today when we get that torrent of Mexican data? Well, we will have to see. But what does that mean for the developed world FX? Now, euro dollar, here we go. Euro dollar's actually done pretty well. Yes, it hasn't necessarily extended gains from where we were at the beginning of the middle of July, back at 134. That is still capping the upside, but we are at a very critical level in euro dollar. Now, it had fallen back early this morning, but it staged a stunning recovery and it's now testing the 200-week moving average. That is the weekly chart in front of you, and the yellow line there, 200-week moving average, 133.85. Now, that is capping the upside for now. Now, when you get to these big levels, three things can happen. We either shoot above it and leave that resistance level kind of in its wake, or you move sideways around there as the market tries to make up its mind about what to do next, or you reject it and you move lower. So we are at a critical level. My gut feeling is that essentially ahead of those FOMC minutes which come out tomorrow, which would be really critical to the timing of tapering from the Federal Reserve, that we could actually see some profit taking around about this 133.85 to 134 level. So that could limit some upside, and actually if we get above 134, that could lead to a wave of selling pressure. But there is very, very good support there at 133.50, then 133.05. That is the Tankan line on the daily cloud. Now, what else is moving? Well, dollar yen today, and that risk-off tone that we've seen in the markets, in the emerging market space, that's really started to filter through to some of the developed markets, particularly dollar yen. So those safe haven currencies have been rallying today. We've seen the yen higher across the board. Likewise, the Swissy hasn't done badly either. And that really hit dollar yen earlier. Now, dollar yen was also under attack from some yen inflows on the back of fears that there was there could have been a nuclear water leak in the Fukushima nuclear plant. That was a plant that was devastated by the 2011 earthquake. So that as well just really fed some of those inflows into the yen. And what we saw with dollar yen was it really back off. So it backed away. So it really fell quite sharply. Got below 97 at one point, but then that's acted as a nice bottom there. However, we're not making too many tracks on the upside. 97.40 is in the very short term is the level to beat. That is the daily pivot. Anything below there is considered a short-term bearish trend. In the very short term at least. But as you can see in this chart, it shows you dollar yen and treasury yields. Even treasury yields have backed off their highs today. They've backed away from those 2.85% level, those highs from yesterday and from Friday. So it just goes to show there's a lot of risk off. The markets are very, very nervous. The markets are also nervous because we are waiting for those FOMC minutes. They may not give us the exact details about tapering that the market wants to know, but they are going to be the most important communication that we get for a while from the Federal Reserve. So definitely worth watching there. Okay, everybody, thank you so much for joining, and please do join us soon for more. Bye-bye.